a fool for not buying Facebook stock? What is going on, guys? Welcome back into this Wednesday video. So we're doing another news article breakdown here. I really like doing these because it really shows you guys how important it is to develop your own opinions, because a lot of these analysts, a lot of these articles I read, I personally don't agree with, and there's no reason that you should not be able to develop your own opinions, especially when you're investing in the stock market or really doing anything with your money, because you have to develop your own opinions, because someone might be giving you their best advice, the best advice out there, but it might not be the best advice for you per se. Everyone's gonna have different needs, everyone's gonna have different wants, everyone's different, so you have to develop your own personal opinions at the end of the day. And I saw this article and I was like, you know what, Facebook's a pretty controversial stock. It's a stock I like a lot, some people don't like it. I digress. I don't necessarily agree with them, but hey, it is what it is. You know what I mean? Hope you guys get some value out of this. Hope you guys enjoy this. If you do, please drop a like on the video. That really would mean a lot to me. You're watching this video on Wednesday, I believe. Today is Sunday as I'm filming this. So that means Tuesday is my birthday. So this is the day after my birthday and you guys are seeing this. So if you could hit the like button for my birthday present, I would really appreciate it. I really, really would. Also, if you want to go up above and beyond, go ahead and subscribe to the channel. That would even mean more to me. Turn that notification bell on so you don't miss any future uploads. And let's get right into this article, guys. So for the article, Facebook, you'd be a fool not to buy the dip by Gary Alexander. Another article by Gary here. I know I really haven't agreed with you too much in the past, but I did agree with you on the last article we went over about Dropbox, so let's see if that continues here. Shares of Facebook have fallen inexplicably after reporting Q4 results, creating a buying opportunity in this solid performing stock. See, right off the back here, I agree with this because Facebook usually crushes earnings, and this was no different. They absolutely demolished their earnings, hit the ball right out of the park, but the stock still went down. I think it mainly went down because there's some pessimism around the iOS 14, the new iOS 14, and they weren't able to provide guidance as to how that's going to affect their business, because it is going to affect their business, but they're not 100% sure how it's going to affect their business yet. So that's something that is a concern for investors. If I had to make a guess, I would say it's not going to affect too dramatically, but it is definitely going to affect it. But guys, this is important here, and this is why I like doing these news article breakdowns, so I can sprinkle in some tips, like I was saying in the Dropbox video, the last one. I can sprinkle in some tips here and there that help you guys will hopefully become better investors. But this is why you don't play earnings, because Facebook's the perfect example. They crushed earnings, they killed it, absolutely killed it. The stock still went down. So don't try to play earnings. If you like the company, hold it, don't even think about it. Earnings is just another day in the park. If you don't like it, then don't buy it, honestly, at the end of the day. Facebook continues to touch all corners of the globe, with daily active users climbing at a steady 11% year-over-year pace. Signaling the confidence in this stock, Facebook also bolstered its buyback program by $25 billion, leaping into $34 billion in current authorizations, or about 5% of its market cap. The company trades at a relatively cheap 24 forward PE, and even less when considering Facebook's substantial cash pile. He makes another great point here. Facebook trades cheap. The 24 PE, that's pretty cheap for a growth company that's going to go double digits for the, I don't know, the next couple of years at least. This is very cheap, very cheap forward PE, and personally, the forward PE is my favorite metric. There's a lot of the ones I look at, like price to book, price to sales, just the general PE ratio. Not so much the trailing PE. I do look at it, but it's not my favorite per se for a lot of different reasons, mainly because I like to focus on what that company is going to be trading at going forward, not behind them, because that's the past, and past does not indicate the future, obviously. But 24 is a very cheap forward PE. And as he mentioned in that last sentence I just read, when you take into consideration the balance sheet that Facebook has, that makes it even look more attractive, because Facebook has one of the best balance sheets, like, in the world. In the world. There are very few technology stocks as 5 or 10 year plays. I think technology is a sector that you have to monitor constantly, day in and day out, and rotate in and out of positions as the fundamental landscape changes as valuations shift. Facebook is one of those rare exceptions to my constant monitoring policy. This is a stock I'm comfortable holding my portfolio for the long haul. Another good point he makes here, there is a lot of competition in this tech space, but at the end of the day, I mean, Facebook is an exception. Like, it's just a monopoly. Instagram, Facebook Messenger, WhatsApp, they're top in the App Store, like, they're just killing it. The reason is simple. Across its family of applications, including Facebook, Instagram, and WhatsApp, the company touches billions of users across the planet and is continuing to grow its reach into the underpenetrated parts of the world, and has become the de facto way for us to stay in touch. So, like I just said, monopoly, Facebook, Instagram, WhatsApp. Next time, I'll just read the article. Other social media platforms like TikTok may be faster growing, but no other company has reached the scale or enjoys the critical mass that Facebook has reached. And Facebook also has a wealth of untapped or relatively new revenue streams, such as Facebook Marketplace, Workplace by Facebook, and several other startup ventures that can support its core app-supported social media network. So he does make a point, TikTok is growing fast, but I don't know exactly how big TikTok can actually be over time per se. Like, I don't know if it's going to be able to compete with Facebook, because Facebook's just one of those companies that's just so far ahead of everything everything, it's hard to envision anyone competing with it right now. Obviously, someday the dynasty very well could fall and someone could compete with it. Will it be TikTok? I'm not 100% sure, but as for the foreseeable future, like for the next 5 years at the very least, 10 years, like there's really no one that can compete with Facebook in my personal opinion. But then on top of that, for what he's talking about what Facebook has going for him, he doesn't even talk about like the Oculus side of the business. VR is coming, it's here, and it's ready to run. Investors continue to be a bit ambivalent on Facebook's prospects, however. The stock is up 26% over the past year, a few points better than the broader market, but certainly lagging far behind its peers in the technology sector. And despite a strong fourth quarter print, shares of Facebook fell after the company reported results. Today, the stock sits at approximately 15% below all-time highs above $300. So I'm thinking like there's a couple reasons this stock price fell after earnings, because as I mentioned, they crushed earnings like they normally do, but they really crushed earnings this time. And obviously develop your own research and your own opinions and all that stuff, because I'm just a random guy on the internet. But I do think there's a couple of reasons. The first one is iOS 14, as I mentioned before. Facebook's not really sure how that's going to affect their business. They know it's going to affect it, but they're not exactly sure how much, which is an issue to investors because the stock market, investors in general, they do not like one thing specifically, and that's uncertainty. And that's what Facebook's providing right now. Personally, I don't think it's going to affect it a lot, but hey, we're going to have to wait and see. You don't know till you know. The second thing is really why the stock price is being held back is Facebook's honestly, it's a problem stock. There's always something wrong with it. There's always some scandal. There's always some lawsuit. There's always something wrong. And that's why, Wall Street and, investors in general really don't like Facebook because they're like, oh my God, they've got this problem. They've got that problem. And even like I have a couple friends who are pretty interested in the stock market and they say the same thing. They're like, oh, well, Facebook has this problem. Zuckerberg's doing this. I'm like, honestly, at the end of the day, who's going to compete with Facebook? But hey, that's the reason the stock price is held back, because it's a problem stock at the end of the day. In my view, the combination of persistently strong fundamentals plus the compelling valuation makes Facebook a very strong buy. I'm treating the near-term dip as an opportunity to increase my concentration of Facebook as I sell out of more high-flying names. Rundown on user growth. Despite Facebook's already considerable scale, the company continued to build up its base of users. Daily active users in the fourth quarter grew 11% year over year to 1.845 billion, a net add of 25 million users since quarter 3, and basically on pace to last quarter's 12% year-over-year pace. Then it shows a chart of Facebook's daily active users. You guys can look at this yourself if you want to pause it. I'm not going to go too into detail here, but this is the chart they have in this article. Similarly, monthly active users also grew at a 12% year-over-year pace to 2.8 billion MAUs, on pace with last quarter's 12% year-over-year growth. Again, here's the chart of the monthly active users. You guys can pause and look at it yourself. I'm not going to go over it here. But if you guys want to pause it or go look at it on their investor relations page, absolutely go ahead. In both cases, DAUs and MAUs beat Wall Street's consensus of 1.83 billion and 2.76 billion respectively. One lingering concern remains from last quarter, however. Facebook's growth in its core home market, US and Canada, has slowed down, due largely to saturation. US and Canada DAUs, though up 3% year over year to 195 million, have actually slipped slightly since peaking at 198 million DAUs in quarter 2. MAUs, meanwhile, continue to grow. This is indicative of the fact that during quarter 2, when lockdowns were in their most shape, social media turned into one of the biggest sources of constant daily entertainment. As restrictions gradually ease and people in the United States have adjusted to quarantine life as the new normal, activity on Facebook waned slightly. This is a concern because Facebook's US users are the largest source of advertising revenue. And while ARPU is growing sharply in the rest of the world, US users still generate more than 10 times their counterparts in Asia, where DAUs grew at a brisk 16% year-over-year pace. So this doesn't concern me for a couple of reasons. One, because, well, the country was in lockdown per se, so obviously, as things start to open back up and people start to go out, you're going to see some sort of decline. Automatically, that doesn't concern me. The fact that it's still even close, that's actually really impressive to me, and I think over time, that number is going to continue to get back to where it was and climb even higher. So that really doesn't concern me. Secondly, a lot of companies weren't advertising on Facebook because if you're like Expedia, if you're like some sort of travel agency, what's the point of advertising on Facebook? Because no one's going to go anywhere. No one's going to book a vacation to like the Bahamas or anything during a time like this. They're just not going to do it. Now, as restrictions ease and as the world gets back to normal in the back half of 2021 and into 2022, you're probably going to see more companies begin to advertise on Facebook more, therefore allowing the company to continue to grow. But at the end of the day, as an investor, this really does not concern me at all. Advertising recovery. Another point to address is that by quarter 4, advertising rates have largely returned to normal as measured by Facebook's ARPUs. Recall that during the depth of the pandemic, during quarter 2 and quarter 3, large advertisers pulled back on marketing campaigns, A, to conserve cash, and B, with the knowledge that consumer spending would be down anyway, regardless of the marketing spend. This caused a downward pull on ad ad pricing, but by quarter 4, this has largely normalized. See, now advertising rates have returned to normal, but the amount of companies that are putting ads on Facebook, that still has time to return to normal. I don't think that's returned to normal just yet, and I think you're going to see that return to normal again in the back half of this year and into 2022. Here are the ARPU numbers that he was talking about above. I'm not going to go over this. You want to pause it, go ahead. If not, it's on their investor relations page. In fact, worldwide ARPU has actually grown 19% year over year versus last year's $8.52, a pre-pandemic quarter, driven by a surge in ad rates across the world, but most notably a 35% sequential increase in the United States, Canada ARPU, and a 33% lift in Europe. A bit more color from CFO David Weiner on advertising trends from the prepared remarks on the quarter 4 earnings call. In quarter 4, the total number of ad impressions served across ad services increased 25%, and the average price per ad increased 5%. Impression growth was driven by both Facebook and Instagram. The increase in average price per ad was driven primarily by Facebook's mobile feed as well as pricing improvement in Instagram stories. In other words, Facebook has benefited from both an increase in user activity/ads served as well as better pricing per ad. Earnings tightened. Of course, the key reason investors should remain bullish on Facebook is because the company continues to throw out generous amounts of profit and cash flow. So why should I be concerned? Facebook's revenue grew an incredible 33% year-over-year pace in quarter 4, again driven by ad rates and high user activity, to $28.07 billion, blasting past Wall Street's $26.43 billion consensus target, which would have represented only 25% year-over-year growth. Like I said, guys, they smashed earnings. At the end of the day, this is just a hated stock. Another key driver behind Facebook's quarter 4 growth was strong holiday sales of its Oculus Quest 2, its flagship AR hardware gaming product starting at $299. Oculus has been a multi-year journey for Facebook that saw slow initial adoption, but the strong holiday results, captured in 156% year-over-year growth in other revenues, is a step towards justifying Facebook's flashy investment hardware. Against this revenue, Facebook generated $12.78 billion in operating income, up 44% year-over-year and representing a 4-point bump in operating margins. This is significant because, pandemic aside, Facebook warned investors before 2020 even began that the year would see Facebook in investment mode as it spends heavily on improved privacy and content controls. What do investments do? They make people money. And I think this investment, Facebook in investment mode, is going to make them a lot of money, especially this Oculus and VR stunt. Per CFO Weiner, the operating margin gains were driven by operating leverage on sales and marketing expenses, which rose only 8% year-over-year to support 33% year-over-year jump in revenue, as well as favorable comparable versus a $650 legal million settlement, 3% of last year's quarter 4 revenue related to privacy last year. Facebook's cash flow generation also continues to impress. The company delivered a record $9.2 billion of free cash flow in quarter 4, up more than 2 times year-over-year, and delivering $23 billion in free cash flow for all of fiscal year 2020, up 11% year-over-year, which is a remarkable accomplishment considering 2 quarters in 2020 were at least partially marred by weakened ad pricing. Record cash flow, no big deal. NBD. Valuation and takeaways. Against the backdrop of these strong results, Facebook trades at a startling low valuation, especially considering how richly the broader market has traded over recent months. At current share prices near $270, Facebook trades just at a 24.24 PE ratio based on Wall Street's $11.16 EPS consensus for the current year, per Yahoo Finance. Considering that Facebook grew EPS at a 57% year-over-year pace in fiscal year 2020, again despite the pandemic, and also considering that the S&P 500 is currently trading at a 23 fiscal year 21 PE ratio, I'd say this is a very modest multiple. Several other things to consider. Facebook also has an enormous $68.19 billion net cash pile on its balance sheet, representing roughly 9% of its current market cap. If we net off that cash from Facebook's market cap, its ex-cash PE goes to roughly 22 times. We note as well that Facebook plans to use some of this cash towards buybacks. The company just added $25 billion to its stock buyback authorization, of which $8.6 billion is currently remaining, bringing the total to $33.6 billion, adding further support to its share price. Take advantage of the near-term dip to buy. Not too shabby, Gary. Not too shabby. I gotta say, I've read a lot of articles that he wrote in the past, and I really wasn't a big fan of them, but that Dropbox one I went over on Monday, and this one I actually am a pretty big fan of. There's a couple things I didn't agree with in this article. Obviously, the US and Canadian ad rates and that revenue that they're bringing in, that I really don't see as a concern as an investor. That's just me. Obviously, that's up for debate. Maybe if you're watching this, maybe you think that's some area for concern. I personally do not think so. One thing or a couple things I really would have liked to see him talk about in this article a little bit more is, one, I would have liked to see him bring up the iOS 14 and how that's going to affect Facebook's business. That's something I feel like is more of a legit concern because that's a little more unknown and we don't know exactly how much is going to affect Facebook's business. I also would have liked to see him talk on the virtual reality stuff a little bit more and how big that can be for Facebook. I think that's more of a reason you can make a bullish case around Facebook as opposed to a bearish case, just based on where the virtual reality is going over the next few years. But hey, that's just me. As for the short term, I really don't know what's going to happen with Facebook. I don't know if it's going to stay where it's at. I don't know if you're going to see more of a dip because of that concern around the iOS 14, or if it's just going to start running. I don't know what's going to happen. But all I know is if it dips more, I really want to buy some more shares of Facebook because I really think this stock has the potential to double, and it's just going to continue to grow up double-digit revenues for, as far as the eye can see, as far as I can see. And I really just don't see anyone competing with it at the end of the day right now. I don't see any competition. There's no one coming up behind it that can take any sort of the market share from it. So if it dips more, I'm definitely going to be a buyer of Facebook. I definitely want to get it into one of my retirement accounts, and I want to get a good position built in there. But hey, you know what? That's just me. Make sure you guys are doing your own research and your own due diligence, because I'm just a random guy on the internet, and we are only here for entertainment purposes only. And saying that, guys, that's going to be it for this video. Thank you so much for watching. I really appreciate it. If you do get some value out of this, please drop a like on the video. That would really make my day, and that would make my birthday. Remember, that was yesterday. So please drop a like on the video. Also, if you want to subscribe to the channel, go ahead and turn on that notification bell so you don't miss any future uploads. Let me know down in the comments what you think of Facebook, if you're buying it, if you're selling it, what you think of this article. I'd love to hear from you guys in the comments, and I'll see you guys in the next video.